Today has been a really beautiful day for crypto. I mean, you guys have probably already seen it. I know you guys are not slow, but Bitcoin is back above $71,000, or right now just slightly below it. Ethereum at 3,650, BNB back at 600, Solana back at 200, XRP back at 65 cents. Generally speaking, just the bull vibes are back. And ladies and gentlemen, this is exactly what I've been saying in my last two videos. Just focus on altcoins, ignore all the noise, ignore all the uncertainties you've got. And even though I'm not a financial advisor, I believe you will be golden. Just to put it into perspective, the amount of FUD and negativity I saw surrounding these AI coins was immense over the past couple of days. But just look how good the coins are performing. One of my favorite coins, as you guys all know, is RSS3. And right now it's sitting at 60 cents, where the last time I bought it was what, 18 cents or something like that? 13, I believe between 13 and 18 cents is what we called it out in a Telegram that we bought it. And I've never touched it since, I believe. I'm not 100% sure, but it's just been a very, very solid ride towards the top. And that's the power of consistency, of just seeing an edge somewhere, which can very often just be Coinbase Ventures or some major investor list, knowing that they're gonna get some things done and then hammering down on it, but having the patience to wait it out. What I mean with that is people want the results sometimes too quickly, where they get burned out before the results can show. And I think one of the most interesting points to discuss here is what I've got in front of me right now. South American gold miner Gnylem Resources to buy 24,000 Bitcoin at right now roughly $1.7 billion. Just this idea alone should really make clear to people this stuff is here to stay. And it's just for the bigger institutions to realize that it's better than gold, better than all the other garbage stuff. Anyway, take a look at this one. Grayscale has apparently transferred 4,300 Bitcoin worth about 300 million to Coinbase, which is the opposite side of the story, which is that for every person or company that's thinking of using this as a store of value, there'll be others who think the exact opposite, who think, no, this stuff should burn to the ground. But there's also another additional layer of people who speculate on whoever's going to come in and whoever's going to come out to arbitrage the profit in the midst somewhere. And in this case here, as we know, there are many major players joining, but there were also many players who joined like this company, but then 5 years ago, who right now are in so many billions worth of profit, they want to cash out something every now and then. And I'd be a hypocrite to blame them. I cannot blame a company for wanting to cash out some, if not even all of their profits, because let's say it acted as a store of value, right? That's what you bought it for. But you are literally getting in at what? Let's say $1,000 a Bitcoin, right now at 70,000. I understand you might be like, you know what? I don't really care anymore. Let's cash out half of whatever we put in to put it into different, more profit producing assets, for example, or just diversification, whatever, pick it. And there comes a really funny part about this, right? Where Crypto said it the best. At $1, they said it's a bubble. When it comes to the entirety of the crypto space, at whatever valuation it has, at $10, at $100, at $1,000, at $10,000, at $100,000, they will say it again. At $1 million, they'll say it again, and so forth and so on. Now, people are putting their money where their mouths are with that, like I was just explaining a little bit. Goldman, the institutional Bitcoin net long and hedge fund Bitcoin net short lengths are at record levels. So basically both sides of the equation, the people going long and the people who are short on it, there's basically an epic squeeze coming as it's all kind of coming together, where again, the institutions framed in orange in this graph, in this chart, are obviously very much long on Bitcoin, whereas the hedge funds number of contracts held is significantly in the minus, together with the dealers, together with the others, whatever that might mean. And it's actually quite funny that smaller is right around the neutral line, meaning that mostly it's just institutions who are crazy long on this right now. On the contrary, perhaps this is not call for a squeeze, Woonomics says. There's discussions about that down below. This means, as far as I know, this shouldn't be interpreted as a squeeze setup. It means institutions want long exposure, while hedge funds are fulfilling the demand by selling short in simple hedged basis trade. Buy spot, sell futures. By doing so, they're earning 20% plus right now. And for those that have never heard of this strategy before, I think the easiest explanation would be here on Investopedia under the cash and carry arbitrage definition. Cash and carry arbitrage is a market neutral strategy, combining the purchase of a long position in an asset such as a stock or a commodity and the sale of a short or of a position in a futures contract on the same underlying asset. It seeks to exploit pricing inefficiencies for the asset in the cash or spot market and futures market in order to make riskless profits. The futures contract must be theoretically expensive relative to the underlying asset, or the arbitrage will not be profitable. Example, consider the following example of a cash and carry arbitrage. Assume an asset currently trades at $100, while the 1 month futures contract, which in this case here we can kind of leave out of the equation as whenever you want, but let's say 1 month, is priced at $104. In addition, monthly carrying costs such as storage, insurance, and financing costs amount to $3 for the spot. In this case, the arbitrageur would buy the asset or open a long position in it at $100 and simultaneously sell the 1 month futures contracts. And if you still have got no idea, I think the best base to start at is understanding how futures work and how you buy and sell these contracts to go long or short. Because a lot of the trading that we do is based around contracts, because you can use leverage. But that's also when I talk about trading on Bybit or trading all these other places, what we use. So it's very nice if you guys take a little time out of your day to research this a little bit more. And then in this case, the arbitrator would buy the asset on the open market at $100 or open a long position at it, and simultaneously sell the 1 month futures contract or short it at basically $104. The trader would then hold or carry the asset until the expiration date of the futures contract and deliver the asset against the contract, thereby ensuring an arbitrage or riskless profit of about $1 because of the price deviance. Hence, this comment here is quite golden in my opinion. Again, these are heavily debated topics, but in my opinion, this is a pretty good call. You really don't know whether or not these positions are hedges, so there's really not that much to extrapolate with high certainty. There's a lot to extrapolate with a high uncertainty, but not as much with a high certainty. And why he said a squeeze is because if one side, for example, the institutions are very much long and hedge funds are very much short, eventually one of the two has to win or collapses or gives up, where the price just really quickly moves a certain way because obviously they gave up or something along those lines. One thing I'll also come back to right now is saying this. I have been in this crypto space for such a long time, right? And the one thing I keep telling you is just believe, again, I'm not your financial advisor, but just consider me your friend here, right? Just believe the cycle. And if you really believe hard enough, it is really hard to not become rich in 1 or 2 years. The only thing limiting you is your belief that it's going to be different this time in a negative sense. So out of all the 1,000 options, of which, let's say, 100 are negative, you think one of those options, so let's say the 1 in 10, is going to be the case. But I'd like to kind of broaden it out, saying out of all the thousands of different things that could happen, 900 of them will probably be extremely good, 50 of them will probably be quite neutral, and 50 of them will be bad. If those are my odds, I'm going for it basically because the risk to reward is definitely looming, or flourishing, beautiful, whatever. Sometimes my English kind of kicks out. And what I always think about is in a year from now, it'll all seem so obvious. Because every single bull market, that's the case. I look back at my videos from 2022 and I keep saying here, just keep on buying, you'll be fine. Just keep on buying, you'll be fine. And I keep saying, right now is not the time to buy altcoins, just go for Bitcoin. Or right before that, I said, sell your altcoins, go for Bitcoin because it's safer right now. And I would never claim to be a guru because I'm not. There's a lot of things that I'm doing wrong. There's a lot of things I do not know. And we're definitely not the best. Trying to be, but we're not. But one thing I do know is that by just following whatever was most logical in the previous cycles, it is just extremely hard not to 10x, 20x, 50x your money. It really is. And I keep coming back to you guys saying my number one regret of previous markets, and I have it every time because it's your own sanity, is not going hard enough. Not getting that put. All jokes aside, it's not taking the risk where I knew that it was the market for it. And there's a couple of YouTubers that I really I don't like their strategies in a lot of ways because it's just reckless to me, right? On the opposite side, that's the way to go from 1 million to 100 million in, for example, 8 months. And many of you don't believe me when I say it, but it really is possible, some real life-changing stuff in a matter of just a few months. We'll see it at many people in the comment section as well, where they turn $4,000 into $4 million over a year. And don't believe it can't be you, because you'll really be surprised how many people don't expect it to happen. For most people, riches just happen, and the wealth, takes a little bit more time, but riches can happen overnight. Can disappear quickly again though, so make sure you are prepared for that. But the main factor there being willing to risk it. If you're too scared to go for some crazier strategies, of which I don't even tell you guys about too much. Most of my strategies are pretty mild, because I know just turning your money times 20 over a year is fine. But many people want to get more towards the 300 or whatnot. You have to go a little bit more on the risk side for that. But just, in my opinion, once the market starts really heating up, like times like this, skip your Bitcoin, skip your Ethereum, skip your top coins, and go lower along the rankings into sectors that I keep talking about on this channel: real world assets, deep in, even AI, even gaming. Because you might say, oh, but it already pumped. It doesn't matter. Just keep going for it. You'll be fine. Oh, but the price went down. It doesn't matter. Just whenever the price goes down, you buy the freaking dip. This is a bull market. If you're making a loss on an asset, you are literally the stupidest trader out there. I don't say a stupid person, because that's different. It's very logical to want to cash out when things are going bad, and that's not necessarily bad. You're a bad trader, because in a bull market, everything, right, every single thing you see right here, except for maybe one or two, let's just say 98%, will be higher than it is right now in a short amount of time. So from that perspective, the only good argument you can give me is saying, I have to sell this for another coin, which I do also. There are some coins that I hold so much money into that I sometimes cash out a little bit purely so I can buy other coins, knowing full well that the price will go a lot higher. But that's the negative side of not having infinite amounts of money, right? If I had $1 billion, I'd still probably have the issue though, because you still want to invest more. But right now, it's not a game of what thing will do good. Everything will. The question is, which thing will do the best? Because even with just Bitcoin, you'll be fine. You see, 6% up today, 40% up this month. But we're looking for more of the gains, the gains. And what's funny is, for example, my friends are discussing saying, hey, WIF is right now at 2.4 billion. Let's all buy it because it's going to go to at least 3 billion. And I'm also just calculating there. 3 billion, I know it will happen, but the question is, won't there be other coins that will do better? And as long as you're rationalizing it that way, I think you're in a really good position. And if you're thinking about it differently, try to convince me as to why. Lido, for example, right now at 2.9 billion market cap. I think it's so low. But looking at this chart, many people would not expect that, right? It doesn't really look primed for crazy gains. But I think over the bull market, for example, some interesting things could happen right there. It's just a little thought I'm putting out there on the side as the Ethereum ecosystem pops off. And many of my previously top coins, like Polygon and some coins in that nature, I still hold. But I'm less bullish on them previously, because I think it's better to go for the newer Ethereum coins rather than older ones. I think, for example, staking Meta, so staking Injective, staking Celestia, staking Pyth. Like, for example, let me show you TIA here. TIA Celestia, for example, staking it is relatively nice, or staking Pyth, I think, is relatively nice if we're just talking about rewards that you can get for staking it. The only contrary side is, because the rewards are so good, the price will deviate a lot around reward cycles. And if you're not good at matching those, if you're not good at selling, or the relative price fluctuations because of these rewards and airdrops, it might not be your thing. But if you have some excess cash, sometimes running some things is not too bad, because they're just ongoing rewards. Another good example is rune stones. I bought different rune stones and I got some for airdrop to me. I think they're now worth like $3,000-$4,000. You got them for free for holding Bitcoin ordinals. And I bought some more because I knew they're going to be giving me free airdrops in the near future. And now I'm looking at my wallet, looking at all these different stupid, relatively stupid things I've gotten. But it's thousands of dollars that I've gotten for free for just, at some point, having some ordinals. I think you had to have 3 ordinals, which could be like $10 worth. And I think I've already gotten $10,000 worth of free things. And it's just those things you have to know, right? But you learn as you go. You learn as you take more risks, try new things. Again, number 1 tip, don't be too afraid to try new things, go a little bit on the riskier scale. Some things I've told my best friends to do, they won't do because they say, oh, but where's the profit? And I tell them, just learn the newer tech. Learn how to use these testnets. Learn how to explore them and see how it all works. Because even if you don't make the craziest amount of money this run, next run then. Because now you know how it works, now you're locked in, and now you can't mess up anymore. The knowledge is worth so much more than making money on one meme coin that you think you make money on, but you don't even know you can't cash it all out because you don't know what the liquidity means, and you don't even know what button to press to cash out, and now all your money goes to zero again. At that point, you wish you knew. Or if your friend tells you, man, I have a certainty, buy it right now, but you don't even know how to open a DEX. Prepare yourself properly. Said it many times before with that last couple of months. Do the work now so it can benefit you over the next few months, and that's about it, guys.